What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ENSC for Ensysce Biosciences. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this is the first time we've covered this stock on the channel, so let's start by giving ourselves a daily roadmap of just obvious areas of support and resistance. Then we'll talk more nuance as we drill down to the 30-minute intraday time frame. What I wanted to also point out is, obviously this gap is important here, but more importantly is what's going on with volume, right? This is the most significant amount of volume we've seen in the history of the stock, right? Obviously back here, just kind of choppy, not really worth paying attention to, but no price levels. There was no volume at price that is as significant as what we saw over the past 3 days is basically what I'm getting at. So zooming in, it's really about the positioning of the traders of the past 3 days, to be quite honest with you. Now, if we take a look at the 30-minute daily intraday setup, this is a thing of beauty, right? If you look at this as a 30-minute bull flag, the very next day we get a consolidation day on puny volume. Look at how muted that is compared to what we saw on the Tuesday session and then the follow-through gap up on the Thursday session. So if you ever see something like this, one, let me know about it, and then two, definitely keep it on a watch list for a potential breakout up and over those highs, right? This indication with the volume is just, it's an absolute thing of beauty. Again, holding up sort of above the 50% mark of that range in here, it just, again, quite frankly, I'm one, speechless. You can hear that in my voice, but two, I'm impressed because it just didn't exhibit any signs of real technical beauty in the past. Okay, so whenever you see something like this, as I said, put it on a watch list. So what are we going to do about it going forward, though? That, of course, is the question to be asking. Well, we have to look at today's session. Okay, all over the place, bit of an upper wick here, bit of a lower wick here, smaller body, indicating some indecision. So what I would say is patience is required on a setup like this. Okay, we'll come in with our Fibonacci's from high down to the low, and what you'll notice is we closed weak. Okay, we've closed underneath that 38.2. If you were to flip the script, it would be the 61.8. That's a weak close here. It's not looking fantastic. Okay, this would have been a much better daily candlestick if we could have at least closed above the 50% mark, or even better, above the 61.8. Or if you, again, you were to flip the script here, these two are basically interchangeable to flip one way versus another, it would be the 38.2. So you get my gist here. It would have been much better to see a close up here. Simply didn't happen. So for that reason, it needs to go on kind of a cautiously bullish. Sure, we're holding a majority of this gap. Yes, I will give you that. But the close was relatively weak based on the intraday session here. So here's a couple scenarios to watch out for. If we get further consolidation here, probably be careful. Wait for a break underneath 450. That should take us to close the gap at and around 3. And from there, reevaluate, right? If we come down and we start printing hammer candles, if we come down and we start printing dojis, anything that would basically make you question the strength of this sell-off, maybe there's an opportunity to flip long over those highs and reattempt the low of day here, remembering that there was a significant amount of volume at this price level, so 450, okay? So that's the downside upside case, if you catch my drift, and you're also not going to take advantage of the downside. Let me be abundantly clear about that as well. No shares to short, obviously no options chain down here either, so you're being patient for the next long setup off of the gap fill reversal, right? Something that would look like that. That's ultimately what we've just outlined. The other scenario would be some sort of consolidation in this range, but ultimately putting in higher lows throughout that entire time. It sets up a break up and over today's high of day 6/4 to get us into the next daily resistance, which would be, and again, there's really no volume to look at back here. The only structural element I could see would be here, close to 1040. I would say whole and half dollars, even quarter marks on a sub $10 stock are worth paying attention to. Basically treat this move here as blue skies. Again, basically zero volume had transacted through that period of time. The structure is very weak. There's nothing defined as an obvious pivot level until we get to that number about 1040. So again, whole dollars, half dollars, quarter marks, maybe even 10-cent marks on something that is trading sub 10 at this point in time. So that's really going to wrap up the video. You have two main scenarios to be watching out for. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.